we welcome our Deputy Secretary-General. She is here to launch the report by the Secretary-General's expert group on debt entitled Confronting the Debt Crisis, 11 Actions to Unlock Sustainable Financing. You will hear from the Deputy Secretary-General. You will also hear from Mahmoud Mohildeen, Special Envoy on Financing for the 2030 Agenda. Also present virtually is Rebecca Grynspan, who you all know as the Secretary-General of UN Trade and Development. Paulo Gentilone, the former EU Commissioner for the Economy. Trevor Manuel, former South African Finance Minister, should also be online, as well as Yan Wang, the Senior Researcher at Boston University's Global Development Center. They will all be able to answer your questions, but we'll start with the Deputy Secretary-General. Please.
Thank you, Steph, and good afternoon to everyone. Earlier this week, I had the pleasure of being here and briefing on the upcoming Financing for Development conference in Sevilla. But today I want to talk about the headline issue of the conference, which will be debt. 10 years after countries adopted the SDGs, development, of course, faces many headwinds. It's slowing global growth, the threat of trade war and repeated global shocks and climate and conflict. But the most unsettling challenge for many developing countries is the debt crisis. Borrowing is critical for development, we all know that, and it does provide a means to governments to invest boldly in a better future for their people. But it is especially critical at a time when all countries are required to undertake one-off generational investments to green their economies and to build critical infrastructure. Today, borrowing is not working for many developing countries. Over 2/3 of our low-income countries are either in debt distress or at a high risk of it. 3.4 billion people live in countries that spend more on interest payments than on health or on education. And the debt crisis is a silent crisis in two respects. First, the crisis doesn't impact the lives or economies of those in advanced economies. The immediate effects of the crisis are contained, and they don't necessarily threaten the stability of the global financial markets. But second, among global policymakers, there's a striking reluctance to allow or acknowledge the crisis for what it is, perhaps driven by the increasingly unlikely hope that the problem will solve itself if interest rates come down. This is why the Secretary-General appointed an expert group in December to try to identify solutions to end the silent crisis and to make borrowing work for development, sustainable development. Today, we publish their recommendations. Their report makes a case that an end to the debt crisis is entirely feasible if opportunities are seized. The experts identify a collection of actions that are not only moonshots, but politically and technically viable. The actions are aimed both at delivering short-term impact in relieving pressures on indebted countries and long-term change by expanding access to long-term affordable financing. The actions that are proposed by the experts reinforce the commitments put forward in the Sevilla outcome document, which world leaders will discuss in Sevilla next week. It offers a chance to change course and to break the debt cycle once and for all. On behalf of the SG, I would like to sincerely thank the 4 members of the expert group, and I hope that we have them online: Paulo Gentilone, Trevor Manuel, Mahmoud Mohildeen, and Yan Wang. And Mahmoud has been leading this group. We look forward to continuing to work with them on the implementation of the proposals. And I do want to express deep appreciation to our system. UNCTAD, also led by Rebeca Grynspan, has been pulling together the system and providing the Secretariat for this to happen. I'd now like to turn to Mahmoud to take us through the 11 recommendations that have been made by the expert group. Thank you.
Thank you, Mahmoud. Please, you have the floor.
Thank you so much. I hope that you can hear me well.
Perfectly.
Fantastic. Thank you so much. And let me build on the excellent introductory remarks by the DSG just now. And when the Secretary-General asked the 4 of us to work on practical solutions, this crisis, as mentioned by the DSG, was called the silent crisis. I hope that after this report and the practical solutions being put forward by us after consultation with many of the top economists and working closely with many of the experts in the field, economists, experts in legal arrangements and solutions, policymakers that this crisis will not remain silent, because the problem is not for the 4 or 5 countries that applied for debt restructuring or debt reprofiling, like the ones applied for the G20 common framework, namely Chad, Zambia, Ethiopia, and Ghana, or sought help outside the common framework, like Sri Lanka. It's basically for the tens of countries that are suffering from debt, but they prefer not to default in their debt or ask for help by defaulting on development. So we highlighted the problem, and as mentioned by the DSG, we spend the time seeking proposals. In our work, we try to do the following. Every proposal, every recommendation had been tested in terms of technical feasibility. But we are, like everyone else, are very much aware of the tough geopolitical dynamics. So we need to be practical at the same time and push for measures that could be applied in fairly good time directly after Seville. And our 11 measures and recommendations could be grouped into 2. A group that is basically dealing with debt relief, and the other group is about dealing with the problem and trying to prevent having it to reoccur again as a crisis. And basically, we put very much into consideration areas of action to lower the cost of capital, to deal with the outstanding burden of debt service, to provide access to finance during restructuring, and that is taking 3 levels of action. One level is related to the multilateral financial institutions, and we proposed specific reforms. One is related to repurposing and replenishing some of the existing funds at the multilateral development banks and the IMF to inject liquidity in the system and for countries in need. The other measure is basically providing very specific reforms in the common framework of the G20, basically to provide support to low middle income countries and to provide more of a timely action with support of funding when the funding is needed for the countries applying for support. I'm happy that this particular measure is started to get traction, and if we are concerned about Africa as a continent, for example, we should really be aware that the African continent, more than half of the 54 countries of Africa are today not low-income countries, but middle-income countries.
No, but that's why there was a message.
Sorry. Rebecca, I think your microphone is on. Please go ahead, Mahmoud.
Thank you. And in addition to that, we provided some practical suggestions, and perhaps our good co-chair, Yan Wang, can elaborate on that, some specific reforms related to the debt sustainability framework applied by the IMF and the World Bank, not just for low-income countries, which is currently under review by the 2 institutions, but to consider reforms of the debt sustainability analysis for market access countries and middle-income countries. We propose as well some specific actions when it comes to the unutilized SDRs, and we are very pleased that this had been suggested in the outcome document. And by the way, every measure that we are proposing is fully aligned with the outcome document and building on it. What we're trying to do is operationalizing and implementing. We're pleased as well that through the Seville platform of action, as mentioned, as emphasized by the Minister of the Economy and Finance of Spain, that the some of the proposals have gained traction, including the use of SDRs to avail liquidity and buying back debts. At the international cooperation level, including the emphasis that we had to put on areas related to regional collaboration, South-South cooperation, North-South cooperation, we are putting some specific measures, including the operationalization of the good suggestion of having a platform or a forum or a club for the borrowers or debtors for knowledge sharing, technical assistance, collaboration, and enhancing the voice of the borrowers, especially with the international financial institutions. There are many other proposals, including matters related to providing support for dealing with debt swaps and not to deal with them as piecemeal. My very final group is related to what the countries themselves had to do. We know very well that a great deal of the problem is not just the issue of the creditors, who are very much responsible for the crisis that we're in, because they lend to countries while they know that there is a great deal of possibility of default, and they provided credit at a high interest rate, and they refused to cooperate in times of crisis. But the borrowers as well, many of them borrowed short-term with generous assumptions about directions of the cost of capital and interest rates. So there is a great deal of importance for policy coordination, capacity building, and dealing with areas related to interest rate, foreign exchange, risk management, and enhancing the capacity of debt management units. In addition to that, lowering the transaction costs when it comes to some innovative financial solutions, including debt swaps. They are all reflected in details in the proposals, and I'm happy that we are going to be given opportunities during the Seville conference to discuss each and every one of these proposals in details. And I wonder if we have an opportunity for Rebecca, Jan, and Paulo to add to any of what I just mentioned now. Thank you so much.
Thank you very much. I'll now turn to Rebecca Grynspan. Please, Rebecca, go ahead. Rebecca, we cannot hear you. So Rebecca, we're gonna come back to you. We'll come back to you. We'll take a question. Or go ahead, Edie.
Thank you very much, Mohammed, on behalf of the United Nations Correspondents Association, and to all of you for doing this briefing. Have you had any indication from the United States on replenishing the international financial institutions and reforming them to make them more inclusive?
Please. Mahmoud, do you want to answer that? Or?
No, we didn't really get directly in touch with the U.S. authorities, but we refer here to the boards of the multilateral development banks, all of them, not just the World Bank, but the regional development banks, and we refer to the board of the IMF. And the case of the IMF, there is the Catastrophe Trust Fund, and the case of the World Bank, there is the Debt Reduction Trust Fund. In the case of the regional development banks, and I was in touch with these institutions, including recently with the African Development Bank and with the Islamic Development Bank, and they shared their interest in exploring options to do that. So it's a board decision, not a one single country decision. And I hope, given the merits of the proposals, that shouldn't really be stopped, but through the dynamics of these institutions. And as you may know, I served at the World Bank for 10 years and at the IMF board for 4 years. So I know if there is some sort of collective interest in this matter, as we have happened before, like the issuance of SDRs or reducing the surcharges of lending, this could happen. So actually, as hinted by the DSG, that we're going to be working closely with these institutions, management and board, to make sure that these solutions are going to be applicable. One more thing, the Jubilee report led by Professor Joe Stiglitz, Martin Guzman, and 30 top economists, many of them have been affiliated with the IMF and the World Bank, have similar proposals. So I'm sure that through closer collaboration with them, we can reach the good outcome that we are seeking. And again, that these proposals are tested technically and politically. They shouldn't really be causing a great deal of concern when we are communicating them to the relevant bodies.
Before we go more questions, let's try Rebecca again and then Mr. Gentilone. Rebecca, let's try it again.
Yes, do you hear me now? Yes? Do you
Go ahead.
hear DSG and the DSG for making this silent crisis visible? The situation has deteriorated from last year to this year, and that's why this is so important with respect to the FFD4. Let me give only 3 numbers to you. The global debt crisis has deepened. Last year, 3.3 billion people live in countries like the DSG said that spend more on interest payments than on health or education. This year, that number is 3.4 billion. Last year, developing countries paid 847 billion US dollars in debt service. This year is 921 billion. And last year, the financing gap to achieve the Sustainable Development Goals was approaching 4 trillion. This year, it has surpassed that mark. So these are not only worsening numbers, this is development going backwards and hurting the SDGs. And that's why, as the DSG said, and as Mahmoud explained, it's so important to bring this to the FFD4. That is an outcome document that provides us the possibility really to be able to make these practical, political, viable solutions that the group of experts have proposed. These are 11 proposals that are doable and that only need the political will of all the actors to be able to make them real. And really thank you for the opportunity of UNCTAD to support this group, but really kudos to the 4 experts and to the SG and the DSG that made this possible. Multilateral reforms, cooperation among borrowing countries, national level actions is a package. It's not a menu to choose from. It's a package. And if the package can be brought forward with the solutions, we will really make a contribution to make finance and for development a reality for most of the developing countries that are struggling. So DSG, thank you very much. The expert group, thank you very much for a wonderful work and for making visible a silent crisis where countries are defaulting on development to not default on their debt. Thank you very much.
Thank you very much. We'll now turn to Mr. Gentilone. Can you please go ahead?
Yes, thank you and good afternoon. Thank you, Amina, Mahmoud, Rebecca. It was a great pleasure for me to cooperate to this report and work with the UN system. I think it's very clear that the nature of this crisis is mostly connected to the increase of debt servicing costs. Practically, the debt servicing costs doubled in the last 10 years for many reasons that I think we all more or less know. And this brought to the situation that Rebecca just mentioned of countries defaulting on development. So there are not so many countries asking of debt restructuring or at risk of default. There are some of them, but there is an enormous amount of low-income countries with unbearable costs of servicing of the debts. So our proposals are trying to look to this kind of crisis. And it is interesting to note, I think, that we live in very difficult times for multilateralism, and these difficulties will be also reflected in Seville. But at the same time, there is a strong will of cooperation among many countries. I have to commend in particular the co-facilitators of the Sevilla conference and the Spanish hosting country, working for many proposals that are echoing what we are proposing and publishing today. So difficult times, but an interesting approach of having realistic proposals to be shared, and maybe we will be able to make some step forward in Sevilla despite the situation we are in. Thank you.
Thank you very much. We'll return back to questions. Gabriel, please.
Thank you, Steph. Thank you very much for the briefing. Ms. Deputy Secretary-General, I was really struck when you were talking about 3.4 billion people around the world that live in countries that spend more on debt servicing than they do on health or education. I mean, that shows that there are real people behind these numbers being affected by it. And on that note, I just wanted to ask you two things. One is, can you kind of characterize your talk with creditors and your negotiations with creditors, because they hold so much power in this equation? How do you convince them to cooperate and see in their best interest that this would benefit them as well to cooperate on policy coordination? And the second one is, I'll ask it in kind of a journalistic style, so please pardon me, but when you're in Sevilla, if a world leader pulls you aside privately and says, Ms. Mohammed, in my country, we are paying more in debt servicing than we are for health or education, do you recommend that we default on our debt? What would you say?
Okay, well, let me start with the last question. Absolutely no, don't default on your debt if you can help it. I mean, the most important thing is to maintain the credibility of commitments that one has made when one takes loans, and you need to pay them off. And it does have a big impact on how you're viewed. And unfortunately, even though the circumstances are difficult, the way in which you are rated and seen with default is it's worse than it is better. But this is what we're trying to avoid. So back to the first question of what we do with creditors is not to get to that point in the first place. And these 11 recommendations are what are feasible. They're not new, but quite frankly, they are ones that now have, perhaps some have come of age, the pressure, the face that we want to put to heads of state, to creditors, when they're facing choices that they have to make at the boards, the policy decisions they have to make, is put a face to it. That, you in your country would not give up health or education. It's a choiceless choice for a leader to have. And it's not that we went into bad debt. That debt became that way because there are a number of exigencies of which they didn't have any control over. So I think, making the case and showing that there are solutions. So it's not just about agonizing and being frustrated about it. We've put 11 recommendations here, proposals here that can actually be had, including putting together a forum where debt can be discussed and a voice can be raised, and we can move on in many of the frameworks and the platforms that there are. So that's, no to debt default, and certainly to do more to make the case, and this report does that. I mean, this is what the SG wanted. What can we do tangibly? Because there is a loss of confidence in the system, that we continue to attend this fora, these meetings, be part of these institutions, and yet the suffering is not anything that is getting better. It's getting worse. The stats are getting worse. The ability for countries to come forward and solve these problems, less and less so.
Thank you. Do any of our panelists want to add anything?
Right. If I may, let me just first emphasize what was mentioned by Rebecca, that the 11 proposals are a package, and they are a package within the bigger package. They are coherent policy measures within the whole system of the finance for development. So they cannot really be taken in isolation or in silos away from the finance for development reforms proposed. And this is very much important when we are trying to read them. They are very much aligned with the proposals for reforming the domestic resource mobilization, role of private sector, dealing with issues related to trade. But here we are trying to be narrowly focused in everything related to debt relief and to prevention of a crisis. To the specific two questions, let me just add, and I totally agree with the DSG in her two answers. But I would like to say it's very much country-specific issue. There is no general theory of debt management and debt restructuring here. There are good examples that we have seen recently from the debt restructuring of Ghana. And recently we have seen Ghana now being recognized by the rating agencies and with possibilities of coming back to the market after a recent upgrade by the rating agency. But that was through agony and tough reforms. There is the other case of Sri Lanka, which had been praised recently after a couple of years with tough discussions and negotiations, praised by the IMF. But again, this has come through political will and to take the hard choices. We're not encouraging countries to default. It's basically a case by case, but we're saying there is better ways of debt management. There are better ways of linking finance to development. There are better ways of reprofiling. And this is basically what we're offering. When it comes to country cases, these are being dealt with on a case-by-case basis. But definitely, there are options for solutions. And in all cases, we shouldn't be remaining with the case that countries spending more than education and health. I wouldn't say education or health. In some cases, we had education and health put together in addition to essential services being spent over less than interest payment, not the whole debt service. So this is basically a kind of a realistic approach to the crisis that have been evolving for quite some time.
Thank you very much. Dulcie?
Yes, I wanted to ask the DSG about the U.S. Was this withdrawal expected? I mean, or was this a surprise?
I can say it wasn't a surprise. I think we continued to engage, certainly member states did, through the whole process. At the end, it wasn't possible to keep them in the room or have them sign on, but we continue this engagement. Many of the recommendations you see cannot be pursued without a continuous engagement with the U.S. So not a surprise, unfortunate, and we continue to engage to get them back in.
So what are they planning to come back in, or, I mean, is it a dead end?
I don't think it's a dead end. Nothing ever is a dead end. That's what we do here to make sure that doesn't happen. For now, they will not be at Seville, and they have not participated in the Seville consensus. But when you see the recommendations in this report, they are wide and they are deep, and they are, as Mahmoud has said, a package that will end up in the domain where the U.S. are, in our IFIs, where these discussions will be had, and we will continue to encourage them to join those discussions.
Great. Thank you. Well, Rebecca, did you have something or no?
Yeah, can I add something very important that Mahmoud and the DSG have said? You know, in the countries have the Chapter 11, for example, in the US, that is for companies not to die, but to be able to restructure their debt so they can continue their activities. And nobody says that the Chapter 11 is to help countries to default or to companies to default in that case. The same here. You know, no country, as the DSG said, wants to default. But if there are issues that have come, systemic issues that have made them impossible to be able to sustain the level of debt that they have, so there are here solutions and improvements that can be made to have a mechanism for an orderly and responsible way to restructure the debt. And let's remember that many of the countries that are in debt distress today are in debt distress because there was COVID and there were a hike in interest rates in the countries that have reserve currencies. And there was the inflation crisis and shock over them. So there were a lot of systemic shocks. So what the DSG is saying and what we are saying in the report is that there has to be an institutional mechanism that will allow countries to be responsible and at the same time to be able to restructure their debt. And there are very specific solutions or fixing to fix the G20 common framework that are presented by the experts, like expanding access to middle-income countries, introducing automatic debt service standstills, ensuring official and private creditors engage in parallel, not sequentially in the negotiations. So there are very specific solutions to make this work for everybody. So let me just emphasize that having a restructuring debt mechanism or a better mechanism to restructuring the debt you cannot say that because you have that, you are encouraging countries to default. Countries never want to default. It's a very painful process.
To all panelists, and then just one last announcement that today is our Deputy Secretary-General's birthday. So before the sprinkler system comes on, we wanted to wish you a very happy birthday, DSG.
Thank you so much.
And a
Thank
card.
you. Thank you. Thank you so much, everyone. Cheers.
And Rebecca, you get a prize for your Anna Wintour pin.
Yes.
Yeah.
Thank you very much,
Thank you.
Mahmoud, Paulo. I can see Wang Fi there, and Rebecca. There's been incredible work that has been done in a very short space of time, but you've built on extensive issues that have been on the table for a very long time, and I think you've just brought them to fruition. Now there's no reason not to act on them. So thank you. Second 11. First 11.